Well, one place where the post-election party still continues is the Indian currency market. Well, the Indian rupee continues to rally for the third straight day, and this three-day rally has taken the rupee to its 16-month high of 65.4150 to the US dollar today. And not only that, the Indian rupee is headed for the biggest three-day gain since January 2015. It's the best performing Asian currency, whether you look at it on a 1 month, 1 week, or even a 3-month basis.
Sure.
But the picture wasn't equally exciting as far as the equity markets were concerned.
No, I think after yesterday's move, at least the Indian benchmarks were taking a little bit of a breather. And of course, while the Nifty has, just declined by no more than 2 points, it's more or less the same picture for the Sensex as well. So we really haven't seen too much change in general overall.
But Akam, the good part is that the Nifty has held on to yesterday's rally, the kind of 150 odd points rise that we saw yesterday. The good part is there's no profit booking that has really come in. Plus, we also saw a good FI buy number yesterday, 4,000 odd crores,
yes,
which probably does indicate that the markets are comfortable with the higher levels that we are seeing.
Absolutely, and considering you've spoken about levels, I want to draw our attention to where we are seeing a lot of resistance in the upper levels. Now, at least based on the options data, as we know that the range has shifted from yesterday. So, from the range that we saw about a few days ago between 8,800 and 9,000, that has now shifted from 8,800 to 9,200 because we're seeing more writing in the upper level calls. So let's take a look at what's happened in the options market today. And while we have seen the Nifty move forward, we're looking at more unwinding in calls as well. But we're also looking at more formation in the lower level puts, so base formation. So we have the 8,900 and the 9,000 puts where we're seeing a lot of accumulation as indicated by the chart here. Coming to maximum open interest, which gives you a range as I was speaking, that's 8,800 and 8,900 having the maximum open interest in puts, and in calls is the 9,200. So overall, we're looking at a roughly 400 point range as far as the Nifty is concerned. And I suspect that, after we've seen this up move, we are likely to see at least some amount of consolidation within this range, unless and until we don't have a very big trigger for the markets.
All right. So moving on to Nifty movers, there was a fantastic move that was seen on Idea Cellular, which rose as much as nearly 10%, 9.9%, and closed. And this is on the back of reports of the company looking to sell its tower business. So 10% added to the stock price today. BHEL also ended with gains of about 3.3%. This was again driven by a news trigger. The company has started operation of its 800 megawatt thermal power plant. Bank of Baroda also among the top gainers after it said it would be raising about 500 crores via bonds. On the losing end, you can see that the IT stocks were bearing down on the indices. TCS, Infosys, HCL Technologies, Wipro, all of these, the entire IT pack was seeing cuts of over 1%. But the theme, Agam, amongst mid-caps that really stood out today is tire stocks.
Sure. So, I want to talk about the fact that the latex collecting activity starts somewhere around August, September. And this peaks out when you have, when it comes to January. So, January onwards, you actually start having a lot of supply of rubber. And that has led to a fall in rubber prices now, which will be a gradual fall from January, February and March. And that is also a reason why we are looking at tire stocks doing very well in today's day of trade and in general overall, because we are looking at a drop in rubber prices. So, that also brings me to the broader markets, and this is one pocket which has done very, very well in today's day of trade. So we have the likes of MRF, you have CEAT as well as Apollo Tires in the non-index large caps, which has done well. Other than that, we have Godfrey Phillips, which has also climbed 17%. Colte Patil, Repco Homes, TVX Sri Chakra, of course, is also a tire company. We have Brigade Enterprises also gaining around 7 to 8%, followed by Indocount Industries. To take stock of some of the losers in today's day of trade, we have Nitin Fire Protection, which has declined by 4.3%. PVR, Balrampur Chini, Bharat Electricals, as well as Jubilant Life Sciences, all losing out anywhere between 2 to 3%. But despite the fact that we have seen some losses as far as the broader markets are concerned, the momentum clearly is with the gainers, not just with respect to the gains, but also with respect to the market breadth. So it's a positive overall, despite the fact that we've seen just flat moves as far as the benchmarks go.
Absolutely. So, flat day of trade for the Nifty today. How will it be tomorrow? Well, all of that depends on the FOMC meet outcome, the meeting later tonight in US and probably early morning, late night for India also. The probability of a interest rate hike by the Federal Reserve now stands at an entire 100%. So this is something that the markets have already priced in and are expected. This is a known. But this time around too, you'll have the markets keenly watching out for commentary and the dot plot as an indication of the next move and guidance for the next for the move and its timing. And if the Fed commentary is hawkish, it could be slightly negative for emerging markets. But having said that, India probably should remain sort of less impacted because of the continuing domestic flows that we have been seeing. But with that, it's an end to today's session. Thank you so much for watching, Dhruva.